yesterday you released it, a new look at corporate treasury strategy. I'll link this in the show notes as well for anyone who wants to read the whole thing. But I thought this was quite interesting, and you have an excellent way of a very let's say engineer's mindset in terms of how you structure things, because it always, by the time you get through it, you're like, well, I don't know how you argue with that. But can you talk through that a little bit? Because it seems that this is obviously, you guys invest in Bitcoin companies, but this is direct advice for any sort of company. You started off with just kind of this idea that, okay, the balance sheet versus the income statement, and how the balance sheet has sort of lost some of its importance in recent years. Can you talk a little bit about that idea, and actually why that happened, why that did lose so much importance versus the income statement?
Right. So basically, corporations, both legally and just what's available to them, they don't have really good savings assets. They hold like T-bills basically, and money markets, and basically cash-like instruments, as their savings. And there's really not that many good like other options. And so the problem is that in that environment, they're not incentivized to save, because if a company is holding a lot of cash, that cash is not doing as well as what we expect from equity returns. So it's like instead of like good for the company, it's actually like an anchor on the company. You'd rather have them pay it out in dividends, or put it into buybacks so you have a bigger share of the company. You want them to put that capital to work, which is a shame because it creates risk. A company without a balance sheet, if it's got no savings or limited savings, the company is entirely valued on its future earnings, which can fluctuate wildly. And the problem is it can be nonlinear. So if the company runs into a problem that impairs their earnings, and then they're trying to raise capital to fix the problem, well, now that capital is gonna be very expensive, because they didn't have any savings. Their balance sheet doesn't matter, and all that matters is their future cash flows, which are now impaired by whatever they're trying to fix by raising capital. And so we generally see, like universities last centuries, and they have these big endowments, that can kind of get, you never really see like, oh, this university went bankrupt, because they have really big savings stacks. They have capital that can last them for a long time, whereas companies on average have shorter time frames, partially because they're not incentivized, or allowed to really save. And even gold is not really good enough, because it gets diluted over time by more creation. So I mean, if you had to hold gold or dollars for 5 decades, you probably should pick gold. Um, but it's still not enticing for corporations because it doesn't keep up with equity returns. Um, it doesn't keep up with broad money supply growth. And so having something that's even harder than gold, but that's also easier to hold and move around and things like that, really it's a super powerful tool for treasuries. And that even goes back to the nation state question, which is there are nation states that are holding trillions of dollars of like U.S. treasuries, and so we're slowly rug pulling the national savings of basically every country. Um, and they can hold gold as an option, and many of them do. That means like no one can literally rug pull, like no one can like just take their assets unless they go in there and get them. But then also they don't really get diluted as quickly. And Bitcoin's basically that on steroids. It's the type of gold that doesn't get diluted at all in the long run, and it's basically gold in the 21st century. So in addition to being a really powerful payment network and all those features, it fixes corporate balance sheets, it fixes national savings, it fixes household balance sheets. As long as someone has a thesis that there's a high probability that this technology continues to function, the incentives work, the network gets stronger. Um, and so I think it's powerful. The biggest downside to that all is its volatility. But in order for Bitcoin to become relevant, it has to get bigger. We like upward volatility. We like number go up, and we don't want it to take a century. We wanted to, so it's got to have upward volatility. And anytime any asset with upward volatility is going to have downside volatility. If it only had upward volatility, people would just lever it, and it would just go to the moon. And it wouldn't, it has to kind of shake off that leverage from time to time. And so whenever there's upside volatility, there's euphoria, there's leverage, and then there's downside volatility, there's fear. And so you can't really, that's a inescapable part of the system until we reach a scale that's closer to its total addressable market. I would say right now we're at a tiny fraction of its total addressable market, and so it trades like an option. It trades like this, what is the chance this becomes relevant a decade from now is how many big pools of capital view it. Um, and so the downside of that volatility is most companies or individuals can't use it as their only savings asset because what you don't want to have is like a 70% drawdown and then you have to spend it while it's drawn down, right? So it's like it's there's unfortunately a little bit of a privilege there in the sense that the generally the wealthier you are, the more volatility tolerance you have, and so that's like a kind of an unfortunate just reality. But basically, it gives it so that at least for a portion of your savings that you don't intend to spend for the next 4 years, it's one of the best assets that someone could hold. And people, you know, like a lot of my readers would think, well, why can't they just hold the S&P 500 or why can't they hold, XYZ? But I don't get that question in Egypt. When I go to Egypt every year, their options are real estate, which is now overbuilt because everybody picks real estate, gold or physical cash dollars that are melting ice cubes. Um, the local stock market's not very good. It's very volatile and not as well returning as S&P 500, and it can be hard for people to invest overseas if they're like in the middle class or working class. Wealthy investors can always move capital around, but normal person often has trouble. And then do you really want to invest in another nation's stock market, right? I mean, do you want to like have is that your primary savings? You technically now you're ruggable by an international entity. Um, and so Bitcoin is just this really powerful savings technology for literally every level of society, from the household to the nation state.